What is the strategy for Authentic Restaurant Brand's newest acquisition? Hello, this is Jonathan Mays, Editor-in-Chief of Restaurant Business. And in this week's episode of A Deeper Dive, I am speaking with Alex Macedo, the CEO of the multi-brand restaurant operator. ARB just made its latest acquisition, Tavern in the Square. The company, which owns brands such as Pollo Tropical, has a very unique strategy as it buys up concepts. And ARB now has $1 billion in annual revenue from the concepts that it generates. And Alex was just named the CEO, and we wanted to talk to him about this strategy and what the plan is going forward. Alex, welcome to the podcast.
Thank you, Jonathan. Good to be here again speaking with you.
All right, tell us about this latest deal.
Well, this is our fifth acquisition under the ARB platform, and it's quite an important one, because we position ourselves in a part of the country that we were in previously, which is the Northeast, right? So Tavern in the Square has operations in Connecticut, Massachusetts, Rhode Island, and New Hampshire. It's a perfect brand to fit into our platform at Authentic Restaurant Brands. Reminding everyone and those that don't know, Authentic Restaurant Brands is a platform of restaurants in which we look for the best and most outstanding regional restaurant concepts in the country. Right. And when we say the most outstanding, it starts with guest satisfaction. So relative to the peer set, we look for brands that have the highest scores by at least 2 standard deviation relative to the peers. We also look for concepts that have significantly higher average unit volumes than the peers and that have margins that are higher than all the peers. Every one of our brands has four-wall margins above 20%. And most important, to get there, you need a great management team. And we look for the best management teams for these brands. And that's what we found at Tavern. Tavern has $8 million volumes, has been around for several years, has very high margins, and under Steven's leadership, really runs restaurants extremely well. So fits perfect into our platform.
Mm-hmm. Why was this one on the market?
I guess that they were looking for the next boost of growth. And then what they liked about working with our team at ARB is, we have the playbook that's already been tested in 4 other brands and really turbocharging a few aspects of the business, right? So they do extremely well across the board, but there were opportunities in the marketing side and data analytics, and we have our playbook for that. There were opportunities on the tech side, and we have our playbook for that. And then on the back of the house, finance structure and finance capabilities, we've learned how to do that very well, provide support. So we were the perfect partner for them to tie up together with and go. So not only do we provide capital for, accelerated growth, but we also provide expertise in these 3 areas, which we've now deployed 4 times with a lot of success. And once they saw those capabilities and the team behind those areas within the Authentic Restaurant Brand team, they were totally compelled to join forces with us.
Mm-hmm. How are you able to find brands? Because you have some very specific criteria that should make these brands in pretty heavy demand. How do you find these concepps?
So in my team, we have 4 different divisions. We have obviously a finance division, a data analytics, marketing, and strategy division. Then we have a technology division, and we have a business development team, right? So the business development team is out on the road every day of the week, every week of the year, just meeting the founders, meeting the concepts, and trying to share a little bit about what Authentic Restaurant Brands is. Now, granted, Jonathan, in the beginning, we were out there trying to prove a concept that no one has ever done before and show value behind it. So we were pushing. Since the success we had with the Pollo acquisition and the 3 other successes with, Primanti Bros, PJ Whelihan's, and Mambo Seafood, we've started to get a lot of inbound. So today we actually have many founders that are calling us, trying to understand a little bit more about what we do. So now it's a mix of us reaching out to potential targets that we see around the country. We are getting a significant amount of inbounds based on the success and the word of mouth that has spread within the founders.
Mm-hmm. So now if I look at the brands you operate and where they are at, so you've got the Northeast covered with Tavern. You have PJ Whelihan's, which is in the Mid-Atlantic, and then you got Primanti Bros, which is in the Pennsylvania, West Virginia and Ohio area. You go down to Mambo Seafood, which is in Houston, and Fiesta Restaurant Group, which is in Florida. So that's you pretty much got the East Coast mostly covered. How do you operate these brands when they're so sort of far apart?
So I think that the secret to our success is we provide support where support is needed, but we don't try to manage the day to day of the business. So we appoint great CEOs, or we keep the great CEOs in the business, and then we provide support when it comes to what I said before: technology, finance, or marketing. We have a playbook that we kind of have proven over the test of time. And when we acquire a business, we meet with the management team and we say, listen, on your tech stack, when you're doing third party delivery, usually we do it this way, and this is what it adds in sales and in margins, and you're not doing that. So when you're ready, we're here to help you. Or we see that your loyalty program is set up in this way, A, B, C, and actually the optimal way to set that up and the optimal way to get the CRM and to connect with the guest is this one. So whenever you're ready to do that, we're ready to go. And then the same thing happens with, when we come into the marketing space and sales, like things that are very basic. We don't try to innovate too much. We just copy what works. I'll give you some quick examples. So at Pollo Tropical, when we acquired them, 70% of the business is through the drive-through, and they didn't have numbers on their product offerings on the drive-through. Like if you go to any McDonald's, Burger King, Wendy's, Taco Bell, whatever it is, you can order number 1, number 2, number 3. No, they didn't have that, right? And that's like, we created those based on data analytics, figuring out which were the most ordered products. And we shaved off 15 seconds in speed of service and improved order accuracy by double digits just by doing that. So it's not rocket science. It's just, we have a team that has, deep roots in the industry and a big bench. And we try to offer to these brands when they're ready. We never force it down. This playbook. Now, all these brands are managed absolutely independently, and we have a backbone on the finance and the technology side and procurement side that we try to help them and consolidate that.
Mm-hmm. Now, part of the strategy is your goal here isn't to turn all of these brands into national names. Yeah, could you talk about that?
Yes, in fact, our goal is not to do that. Our goal is to keep them regional. So to the extent that we can develop Pollo Tropical within the state of Florida, we'll do that, but we have no plans of taking it to California. Now, we would buy the Pollo Tropical from California if we wanted to have something similar in California. So we don't really have a plan to take any of these brands nationals. I think that eventually, we're probably going to bump into one or two that could have national appeal, but that's never the starting point, right? The starting point is to grow Primanti's near the Pittsburgh area. The starting point is to grow Mambo within Texas. We just opened, we're opening our 4th location in San Antonio this year. We had none in San Antonio at the beginning of last year. So we try to keep it within, the geographical scope. Now, I'm pretty sure that eventually, as we grow, we're going to have brands that will have the potential to go national, and then we'll do that when the time comes.
So you're not necessarily opposed to getting a brand that has that potential, but your goal,
we don't underwrite that. Yeah, we don't underwrite that, and that's never the plan initially. But it would be amazing if we could do that, right? And I think we have the capability and the teams at ARB that have managed big national brands and complex systems, and we'd be able to do that when the time comes, for sure.
Mm-hmm. How do you know whether really one of these really good regional brands is just a regional brand versus has a potential to be national in scope? And I ask that because a couple of the brands that you operate had been seen as potential national brands at one point in their lives. Pollo Tropical is actually a perfect example, but Primanti Brothers also. They were viewed as something that has bigger potential, and then it just, for whatever reason, or didn't work out. But then you have some chains that just particularly thrive as not just as a regional cuisine, but as a national one, maybe like Raising Cane's or Dave's Hot Chicken or whatever. So how do you know whether something is a regional concept or national?
A lot of it has to do with the product being offered. So like Primanti Brothers has a very specific hero product with his our almost famous sandwich. So that one, whenever they tried to open Primanti's like too far away from the core, and it looks like a sports bar look and feel, the guests in the distant markets, they wouldn't understand that was the hero sandwich because they had never seen anything like that before. It's quite unique. It's got coleslaw and fries in the middle with a big Italian bread. So it's quite unique. It's delicious. But what happened when we opened it too far is people would just go towards their natural habit of what they would order in an establishment like that, and order burgers and order chicken wings and order pizza and so on. So it never really got. So that's why it's important for someone that has a unique product like that to go slowly. Now, Tavern in the Square, for example, it's a polished casual establishment with great service, an amazing ambiance, actually very healthy food. Everything in the restaurant is gluten-free. That could be something that we expand nationally, right? Now, we're in 4 states already. Of course, it's all New England, but they're not the same. And then Pollo Tropical is one that I love because if you think about it, yeah, they tried to jump state borders perhaps too quickly in the past. But granted, in the last several years, Chipotle has taught the country to eat rice, beans, and chicken to a certain extent. And maybe Pollo Tropical was just too early in that regards, right? Because the core of our menu is actually rice, beans, and chicken, and 40% of our menu is served in a bowl. So not too different from what, Chipotle has taught the country to eat. So I would say that perhaps our chances to expand that nationally would be higher today than they were in the past. But again, that's not part of our plan. So if you look at Florida, we have around 125 Pollo Tropical restaurants in Florida. McDonald's has 950, Burger King has over 500, and so does Wendy's. So, I mean, we could do a lot in the state of Florida still. Our volumes in the state of Florida are north of $3.5 million. So that to me says that we could open more restaurants right here where we are right now.
Yeah. Yeah, I always felt that Pollo Tropical had more potential beyond Florida, but they do have a history of, maybe growing a little bit too fast, which I think is one of the challenges. And I think one of the things that I appreciate about what ARB does is the fact that its goal isn't to take these brands and immediately make them bigger and bigger names and push expansion. Only the thing is, we just got done with a year in which we had, one of the most bankruptcy heavy years the restaurant business has ever seen, right? Going back to the Great Recession. We hadn't really seen a year like that. And most of last year's bankruptcies last year, I probably don't need to tell you, were fast casual brands that had at one point been viewed as, sort of this next big thing. And then we've seen a lot of situations where, these investors come up and they invest in these concepts and say, all right, we need growth. And then these brands make compromises to get this growth. And a lot of it is over leases or whatever, or, just choosing locations or, maybe just flat out brands don't work as well outside of their core market that people thought they would. And so, to me, that choice of whether a concept works locally or is a regional brand versus national is actually a pretty tough question and a pretty important one in the investment community.
Oh, at least it's a huge one. And a lot of the plays historically had been to take great concepts and make them national, right? And I think back in the day, that was something that was easier to do than today. So if you look at the 80s and the 90s, that was the big time of making national brands through franchising, whether it was McDonald's, KFC, Taco Bell, Burger King. Those were the times. I think now, becoming a national brand, it starts with being very strong regionally and then expanding, right? Whether that's Zaxby's or Raising Cane's or you name it, a bunch of other concepts. In our point of view, what we try to do is we try to get great and make it even better. So in all of our acquisitions to date, all 4, we have been able to increase average unit volume by more than 10% within 2 years. We have also been able to expand margins by a lot, by at least, depending on the case, from 200 to 500 basis points within 2 years. Now, this is without any cost cutting. This is just by adding intelligence and technology to the restaurants. So what we've done is to make our existing concepts, which are great, even better. And, we had a pretty good year last year and we're off to a good start this year. So I think that sets us up to be able to grow, at our own pace. Some brands are going to grow faster than others. Some brands aren't going to grow at all, right? We can make that decision. We don't really have to grow all the brands if that's not the case. So it's a really good position. I mean, we did take a lot of risk. I mean, when we founded this, just under 4 years ago, we had an idea that we would build a team at the holding level of ARB, and that team would be able to get great brands and make them even better. And we invested behind that. And we put a lot of effort and time behind that, and it proved out well, because we talked to a lot of people today, Jonathan, that say, oh, I always thought about buying regional brands and doing it. We've talked every time we talk to someone, they say that. I'm like, so why didn't you do it? And they say, because we thought about it. It's a lot of effort. It's a lot of risk, because you have to believe that what we believed in it. We put our money where our mouth was, and sure enough, so far it's worked well for us. But yeah, our plan is not to go out shooting and opening restaurants. We just want to make what we have better, and then grant ourselves the ability to open new restaurants if the business case and the ROIs are good.
What you said you've been able to increase unit volumes. What are the things that you've been able to do that have worked?
Menu optimization is something that we spend a lot of time focusing on. We also focus on, executing third-party delivery in a very efficient way. It's become a big part of the business. You can't fight it. You have to embrace it. So we have our own methodology to embracing, whether it's Uber Eats or DoorDash, and making that as effective as possible. And then just work crazy about operations, right? So in everything we do, in most cases, we've reduced and simplified the menu more than added new products. And to the extent that we can have better operation, that flows down not only to the bottom line on the four-wall margins, but also in general better guest experience, because we execute better on what we serve, right? So we can provide better service, hotter food, quicker food. So it's just the basics, John. It's just understanding the menu, making the menu more efficient, and allowing our team members to execute better on the day-to-day. So that's kind of what we do. We find best practices across the board. We're crazy about finding best practices. And then we show them to the management teams, and they have the ability to execute on their own whenever they feel fit to do that.
Yeah. Menu simplification is pretty important. And I think the last couple of years, the restaurant industry introduced more limited time offers than they ever have. So fundamentally, at the end of 2024, the restaurant business was more complicated on a menu standpoint than it ever was. Basically, completely abandoning, this, simplification effort that dominated 2020 and 2021. And then they've gone in the complete opposite direction. The problem that I always have with that is, look at where traffic was in 2024. It wasn't as if all of those new menu items drew more customers. And in reality, it did absolutely nothing to draw more customers. And to me, do what you do really well, and then focus on keeping the customers that you're getting, and make sure your operations are really, really good, because at the end of the day, all of these new menu items aren't actually drawing more customers. So to me, optimization is such important.
I have the perfect example for you. The year before we acquired Pollo Tropical, they had 52 LTOs in 1 year, only 7 of which were advertised. This year, we just beat the all-time sales per unit record at Pollo Tropical in January, and we beat it again in February. And our marketing calendar for this year has 0 items that we've never offered before. We are talking about the core. We are serving hotter food. We are serving it quicker. We are making the lives of our team members much easier. Our turnover is the lowest it's ever been. So we're running a happy place with great food. And by the way, traffic is positive for us, and it has been positive for the last 3 years at Pollo Tropical. So it's all core and running great operations.
I love it when guests confirm what I think going into a podcast. So that's always a positive development, in my opinion. So so what's the plan going forward now? I mean, you've crossed the $1 billion threshold. I assume you're going to start heading west with some of your acquisitions now. Where do you go from here?
I think we are. So right now we have a pretty active pipeline. I think our plan is to acquire one new brand every 9 months. It's kind of the number that we think we can digest the brand before and then be ready to do it all over again. We have about 3 or 4 active conversations in our pipeline. All of them would be in new geographies, which is really exciting for us. And yes, I think we just keep on going. We're at $1 billion in sales. We crossed $150 million in EBITDA. So the business generates enough cash for us to kind of acquire brands as we see fit. We don't have a target in the size of brands. I think, given our size now, we're probably not going to acquire anything too small, but we could. It just depends on the growth potential. And we're taking our time. We're not rushing. We're not rushing to it because, business is great the way it is. And we just want to get brands that, cross and check every box that we have. And we have to be very, very disciplined to do that.
So, okay. So every 9 months. So in other words, I can basically expect an email from you guys in about November.
We'd love to send you that email by November.
Are there types now? You seem pretty agnostic in terms of what type of concept, because you've got a drive-through heavy concept in Pollo Tropical. You got fast casuals. You just bought a polished casual diner. I mean, it seems you're pretty agnostic. Is that going to be the case going forward, or what?
Yes, absolutely. Our biggest concern is that the guests of these locations exhibit fan-like behavior, like they're rooting for their favorite football or basketball team. That's their brand, because that helps us through tough times. It also rocket ships on good times. So the first thing is these brands have to be loved and they have to be well managed. And as a result of being loved and well managed, usually sales are higher, profit margins are higher. And that's really the only criteria that we look for. And, we look to find brands that are that good and still have a lot of opportunity, right? But that's on a case by case basis.
Mm-hmm. Is there a plan to exit any of these brands if they say get to a certain size or whatever, or is a plan to just buy, keep, and then eventually do something with ARB?
I think the latter. I think our plan is to buy. We love our brands. They're performing well. The management teams are right on. And I think our plan is just to acquire more brands to the extent that we find the right brands to acquire for the right price and in the right markets. And then eventually do something strategic with ARB.
Right. Superb. Fantastic. This was great, Alex. I really appreciate you joining me this week on the podcast.
Thank you so much, Jonathan. Pleasure to speak with you.
And that should do it for this week's episode of A Deeper Dive, which was edited, as always, by Spoons. Artwork by Nico Hines. You may find this and other episodes of the podcast on our website at www.restaurantbusinessonline.com/article/deeper-dive. Or please subscribe on Apple Podcasts or Spotify. I'm Jonathan Mays, your host, podcast producer, and the editor-in-chief of Restaurant Business. Thank you for listening.